Brian, extremely excited to have you here. As I just mentioned, head of alternative investments at Ampega. To kick things off, and for those you don't know, you'll probably give a little bit more introduction. Ampega is the captive asset manager of the Talanx Group, one of the largest insurance companies in Germany. Tell us a little bit more about your role at Ampega and a little bit about Ampega.
Right. So, well, you said the main point. We're running mostly insurance company money. We have some third-party money as well. My area covers the entire alternative investment spectrum, from venture capital and private equity, real estate, infrastructure, and private debt. And private debt is kind of an overlay over those three other columns. We also have some direct investment activities outside my remit, but essentially the role is to advise the clients on how to allocate to illiquid alternatives globally.
And you know, managing investments for a large insurance group, you know, diverse ALM, SAA requirements across the different clients, I guess, of the asset management platform. Give us an overview of how you approach the alternative investment spectrum across these profiles, commonalities. How do you actually invest in alternatives?
Right. Well, as you can imagine, it's a German insurance company group, so there are a lot of regulations, a lot of complexity, and those are resolved through an optimization exercise, all the models and so forth. There's kind of a qualitative overlay within that, but because there's so much complexity, there's kind of an underlying structure to how they allocate to all illiquids versus liquids. So we have a big liquid piece to cover the insurance claims, and then we're kind of the other end of the barbell where we expect to generate lots of returns. And each one of those four spaces has its own personality, its own reason for existence. The private equity is growth. It's the yield kicker. Real estate is theoretically inflation adjusted. In practice, in terms of total returns, not always. Infrastructure has sort of has a similar profile. Also has sort of a sustainability or impact angle as well, increasingly. And private debt is mostly a floating rate asset class. It's not sort of decoupled from fixed income conceptually because it's illiquid. It's also coupled to the corporate financing space. So that's sort of our toolkit for advising the clients. And each client's different. They have their own personalities, but that's what we can work with. And
I think maybe we missed it, Carl. I think we might have we prepared a slide that we didn't put up. Carl, I don't know if you have it for us. I think this, Carl, looking in your direction in the back to talk about the toolkits you actually use.
Yeah, well, I'm just verbally. So it's around, if we look at just the alternatives, I'm speaking just of the indirect space, the funds, around 40% equity, private equity, 30% real estate, and then 15 in debt and infrastructure.
And total AUM of the group that you're referencing?
15 billion NAV.
NAV, okay, here we go.
Oh, here we go, right. And globally, you see the allocation. I think it's really representative of our liability structure.